We are once again here to present our earning disclosure for the Q1 2020. From wherever in the world you are watching us, a very good afternoon from Prime Bank family. Uh, it's been last 2 months has been very turbulent, as we all know. The whole world has been suffering from this global pandemic called COVID-19. Bangladesh has not been an exception to that. And our business, the banking business, as well as all the businesses in the country have been severely impacted. We all know about that a couple of weeks back when we presented the earning disclosure for our full year financials 2019. We discussed on that issue to quite a certain extent. Today we have the earning disclosure for Q1 2020. This is Rahil Ahmed, the Managing Director and CEO for Prime Bank, here again with my esteemed colleagues from different parts of the bank. I would first take the opportunity to introduce the colleagues who are there with me today. To begin with, I have our Deputy Managing Director and Chief Financial Officer, Habibur Rahman Chaudhry.
Thank you.
Then I have the Deputy Managing Director and Head of Corporate Institutional Banking, Faisal Rahman.
Thank you, sir.
I have our Chief Operating Officer, Mr. Abdul Halim.
Thank you, sir.
I have with me our Head of Treasury, Mr. Matiur Rahman. I have our Head of Consumer Banking, Mr. A&M Mahfouz.
Thank you, Rahil bhai.
Head of Transaction Banking, Structured Finance and FI, Shams A. Muhaimin.
Thank you, sir.
Head of MSME Banking, Syed Omar Tayyab.
Thank you, sir.
And Head of ICC, Mr. Jashimuddin.
Thank you, sir.
Before I request our Chief Financial Officer, Habib, to give the presentation on earning disclosure, just want to say in a nutshell that Q1 of 2020, definitely as we all know that was before the pandemic hit Bangladesh. So the going was good in line with the way Prime Bank had been operating for the last couple of years. The operating performance of the bank has been satisfactory, or I would say more than satisfactory, given all the limitations that we have had. So let's hear from Habibur Rahman, our CFO, how we have done in the Q1 of 2020. Habib, over to you.
Thank you, Rahil bhai. So good afternoon, ladies and gentlemen. We can start with forward-looking statements. This is pretty standard disclaimer from Bankspur. Before cracking the financial number, I would like to highlight some major events which are material to banking business in Bangladesh. And to start with, 9% interest rate cap on lending. This is now a reality for banking industry in Bangladesh. Nazrul, can you go to the next slide, please? Yeah, so 9% interest rate cap on lending. This is a reality for banking industry in Bangladesh, and we all are feeling the real impact of these regulatory changes. This fixed interest rate regime is hitting profitability of banking companies big time. And in my view, it is adversely impacting private sector credit growth to some extent, as many banking companies are not finding their risk-adjusted return very lucrative enough in the existing credit risk environment. Then, as you know, a new regulation has come regarding this transfer of interest income to block accounts. And as you know, for the month of April and May, banks needs to transfer the interest into a blocked account, but we are expecting a detailed guideline on this issue from central banks, and only then we'll be able to assess the impact on our profitability because of these particular regulations. Significant changes has been made on CRR as part of monetary measures taken by central banks due to this COVID pandemic. And as you know, before the pandemic, the CRR was 5.5%. And this has been cut down to 4% only. That means a cut by 1.5%. And this will increase money supply to the banking industry significantly. This measure will pump around 20,000 crore as loanable fund to the banks in Bangladesh. Then some changes has been brought into policy rate. As you know, before March 2020, the policy rate was around 6%. Means the rate has been cut by 1.5%. Plus, the central bank has introduced a targeted repo of 360 days. And it will help banks to reduce cost of borrowings and improve existing tenor mismatch. ADR increased to 87% from 85%, which is definitely improved lending space for banks which have significant or sufficient liquidity and capital. And another new regulation comes in regarding restriction on degradation of loan classification from Jan to June 2020. These regulations may reduce regulatory NPL in short term. Next slide, Nizmul. Now, about the stimulus packages declared by the government. As you understand the fact that no economy in the world is completely immune to the financial challenges emerging out of this pandemic. And every study is coming up with different kind of stimulus package to cope with the financial challenges. And Bangladesh government and central bank has also declared handsome stimulus package to minimize damage on economy with a special focus on pumping liquidity in economy through refinancing schemes. And these are like workers' wages for export-oriented industry, and the package size was around 5,000 crore, and entire 5,000 crore will be coming as refinance by Bangladesh Bank. And this stimulus package includes both foreign currency and local currency. EDF fund limit has been extended by central bank from 3.5 billion to 5 billion after this pandemic. And to support industry and service sector, government has declared a stimulus package of 30,000 crore. Out of that, 15,000 crore will be refinanced by Bangladesh Bank. And on SME business, they are supporting this SME business significantly, declaring a package of 20,000 crore, and 50%, I mean 10,000 crore will be coming as refinanced by Bangladesh Bank. Then working capital for agriculture sector, 5,000 crore, pre-shipment credit, 5,000 crore, low income people, farmers and micro businesses through MFIs, they'll be supporting around 3,000 crore. Enhancement of other existing financing scheme to support CMSME will be 1,400 crore. So considering all these things, we predict that liquidity will not be an issue for banking industry in 2020, both local currency and foreign currency. I'd like to add the fact that we are seeing bumper agri productions plus low oil price in international market. And plus we have more than $34 billion FX reserve as we speak. So if we summarize all these things, we don't foresee a liquidity problem in Bangladesh economy in coming days. Next slide, please. Now I would like to go through the financials of Prime Bank for Q1 2020. To start with the bottom lines, earnings per share on solo basis, we have experienced around 18% growth on EPS year to year in Q1 2020 and 12% growth on consolidated basis. Return on asset has also increased from 0.58% to 0.63% in Q1 2020. Return on equity also has increased to 7.54% compared to 6.58% in 2019. And provision coverage has increased from 73% to 117%. As you know, this was part of our strategy. We all understand that we can have some impaired asset, but more important thing is that whether that impaired asset is adequately covered or not. So as part of our strategic intent, we are increasing this coverage gradually. And that is very much evidenced from this Q1 19 and Q1 2020 provision coverage. The other important factors and the pride factors for this bank is capital adequacy ratio. As you know, we have highest capital adequacy ratio in the industry, which is 17.60% in Q1 2020. During this pandemic scenario, I understand that everyone's focused is on cost. In Q1 2020, our cost income ratio has also come down to 54.77% from around 57%. And net asset value has also increased to 24.1 taka per share. Next slide. Yeah, now if we dig down the underlying factors behind these outstanding financial performance, we see that our net interest income, though our net interest income has come down by 16 crore, our investment income has gone up by 60 crore, more than 100% growth on investment income. This was part of our strategic intent. As you understand, though our average deposits during this period has increased by almost 1,400 crore, our lending book has gone down by around 300 crore. But our investment in risk-free instrument has gone up by around more than 90% because we foresee the credit risk climate in our country, and we took a strategy to channel our deposit to investment into risk-free instruments, and that's why it has resulted a tremendous growth in interest income in Q1 2020 versus Q1 2019. Commission, exchange and brokerage has come down by 11 crore only. That's because, as you know, in last year Q1, there was a devaluation of BDT by central bank, and that's the reason of this exchange loss, exchange gain during Q1 2019. Other operating income is almost flat. We have been able to increase slightly other operating income, and other operating expense has gone up by 12 crore, and that's because of our contribution to the society as CSR due to this COVID pandemic and some other reasons. That is how we see almost 18% year-on-year growth on operating profit in 2020. Next slide, please. Our yield on advance has increased by 20 basis points, and cost of deposit is almost flat. Thus, we have been able to improve our net interest margin by 14 basis points during this challenging time. Next slide. We have not only able to increase this NIM, at the same time, we have been able to maintain our liquidity positions in the market. Next slide. On loan loss provision side, as I explained that our strategic intent is to increase the coverage, and you're seeing a 17% increase in loan loss provision. Tax provision has increased by 15% because our operating profit, because of our incremental operating profit, and net profit after tax on solo basis has increased 18%, and on consolidated basis, net profit after tax has increased by 12%. Next slide, please. As you understand, we have 5 subsidiary companies, wholly owned subsidiary companies. During this period, because of distressed time in capital market, we suffered insignificant loss of around 4 crore, including all these subsidiary companies. Next slide, please. On deposit book, we have not offered very high rate on deposits in the market. That's why you are seeing a slight degrowth on deposit book, or if you compare with December 19 numbers. But as I told you, the average daily average deposit in Q1 2020 has increased by 1,400 crore versus a daily average deposit in Q1 2019. Our CASA mix, we have been able to maintain our CASA mix at 33% in this challenging time of Q1 2020. Next slide, please. On loan book, we have slight degrowth because we have channeled the mobilized deposit into risk-free instrument, considering the credit risk environment in the country and our risk appetite on that. And non-performing loan has come down from 4.66% to 4.45% in Q1 2020. Next slide, please. And this is, I told you, this is a pride factor for the bank, that we maintain highest capital adequacy ratio, 17.6% in Q1 2020, and out of this, almost 11% is Tier 1 capital. Next slide, please. So thank you so much from my side on financials.
Thank you, Habib. Thank you so much for presenting us with this outstanding performance of the bank, which is very much in continuation with our earlier performance. I mean, I'll just take cue from Habib here and just want to recap on a few of the areas just to stress on. I mean, as you may have seen, that almost about 18% growth over quarter to quarter. I mean, from Q1 2019 to Q1 2020. That is a very impressive performance by the bank on an operating level, ongoing through the strategies that we have been adopting over the last couple of years. Just to stress on what Habib mentioned and what was very much visible on the presentation as well, we have not gone for any kind of significant asset growth. I mean, that is something that I'm reiterating. In our earlier presentation also, we mentioned in our earlier disclosure session, we are not going to go for very aggressive asset growth. Rather, we are very conscious, or we shall continue to remain very vigilant in terms of the quality of the asset that we have. That doesn't mean that bank is shying away from further investments or further asset growth. What we are looking at, we want to stay with the niche of our client that we have, the wholesale banking clients. My colleague here, Faisal Rahman, in his presentation, which is due right after, he is definitely going to touch on that. I don't want to steal the thunder from him, but the strategy for the bank remains that stick with our tested clients and nurture them and support them, especially during this pandemic scenario. I just want to take a few seconds on the stimulus package. The way we have seen it, that it was a very timely initiative taken by, firstly, the Honorable Prime Minister to announce it, and then Central Bank and all the other relevant stakeholders, they all put their heads together and they came up with this very timely package to be disbursed. The responsibility lies with the banks, and we are no exception to that. Our strategy for going forward couple of quarters is definitely going to be to disperse this stimulus package amongst all our good clients and our clients who need it most. To give you an idea, we already have disbursed. We were one of the very first banks to disburse the first tranche of the 5,000 crore stimulus package, which was to support the wages for the export-oriented concerns. We are amongst the very first ones to disburse on the 30,000 crore stimulus package for the large and service sector, the large industries and service sector. And we are trying to support almost all our major client groups who has the relationship history with us. And we are gonna be there to support through this pandemic related distress scenario that they are all in. At this point of time, I would request Faisal Rahman, the Deputy Managing Director and Chief Business Officer for Corporate and Institutional Banking, to give us a little bit of overview what's been happening on the wholesale banking side.
Thank you, sir. We have done well in Q1 of 2020, but we could have done better. Q1 2020 has been a challenging quarter due to the COVID-19 situation. This has disrupted the entire global supply chain, affecting all corners of business. If we look at this slide, deposit, we have grown by 8% if you compare Q1 with the Q1 of the previous year. So this has been possible due to mobilization of low-cost deposit and a robust onboarding of transactional accounts. One of the key strategies is to drive the CASA, so that remains one of the key focus areas. In terms of loans and advances, we have degrowth by 4%. That is again is in line with the strategy that is with de-risking of the portfolio. We are not aggressively growing the book. And basically there are some regulatory circulars that came in February back in 2019, which also made us reduce the OBU book. So that has primarily the reason behind the reduction in the loans and advances book. Nazmul, if you can go to the next slide. In terms of export, the bank has done well, I would say. The country has registered from July to April 2020. Country registered a negative growth of 13%, whereas Prime Bank, we have registered growth of 4% in export. Import has not done well. We have been more or less steady if you compare to the last quarter of 2019. And if you compare it with the same time of 2019, we have declined, import has declined by 12%. This is primarily due to, as I mentioned, the global supply chain disruption. Imports significantly fell. On top of that, we had opened some one-off large LCs in 2019 first quarter, which was not the case here. The credit growth overall was slow, so overall we have not seen any capex or BMRE activities going, ahead. So that's more or less from my side. I would request now to say something to Shams Moimin on transactional banking.
Thank you, Faisal. Ladies and gentlemen, good afternoon. I'll extend my overview of Transaction Banking Structured Finance International Division and the performance for Q1 2020. I will start with our cash management business. Najmul, if you can move to the second slide. Okay, thanks. During Q1 2020, our wholesale banking deposit book has made a moderate growth of BDT 5.43 billion. Our strategy for the year is to grow the book fueled with CASA and consistently repricing the costly deposits, and also to replace large tickets to avoid concentration risk. As part of the strategy, we allowed shredding out high cost term deposits and replacing those by CASA. I can tell you that up till now, the book has grown by around 8%. So On the next slide, I will take you through the trade business of the bank. First, I will start with export. We have seen decline in RMG export throughout the country during second half of 2019. The trend continued in 2020 and deteriorated further due to outbreak of COVID-19. Despite countrywide decline in growth, our growth has been consistent. If we compare first quarter 2019 with 2020, the growth is 4%. But if we compare fourth quarter of 2019 with first quarter of 2020, we have a staggering growth of 20%. In import side, we have degrowth of 12%, as already mentioned. However, there is a moderate growth of 2% when we compare with fourth quarter of 19 with first quarter of 20. On the macroeconomic stand, the economy suffered gradual slowdown from the second quarter 2019. During this period, we have seen decline in RMG export, fall in price of major commodities, increasing trend in FX rates, increasing gap in BOP, increased trend in local currency borrowing rates. This kicked in slowdown in requirement for raw materials and capital machinery import. As a result, we have seen notable decline in capital machinery import in Q1 2020. Furthermore, due to de-risking, we had to let go number of relationships and their associated throughputs. The biggest hit came due to COVID-19 effect. China being our biggest trading partner, it is a general practice of our customers to open import LCs before Chinese New Year holiday season. This year, New Year holiday and outbreak of COVID-19 coincided and China got into lockdown. This affected the entire supply chain for us. First, COVID-19 affected our major sourcing country, and then it got transmitted to our buyer countries of Europe and Americas. As a result, our import side suffered, and eventually it will have its toll on the export side as well. If we move into the next slide, on the remittance space, in Q1 2020, we grew our remittance throughput by 67% to US $330 million. Driver for this growth has been largely from commercial remittance. Wage-based remittance has maintained steady growth, but it has a sign of slowdown in coming quarters. In order to boost our wage-based remittance, we are working relentlessly to digitize the process of enhanced customer experience. We have already launched our state-of-the-art remittance processing engine, which is allowing us to process near real-time transactions. Shortly, we will be launching our own online platform for remittance business in Singapore, which will subsequently be replicated in UK and hopefully to other major geographies. I can tell you this is going to be one of the first of this kind in Bangladesh. If I touch base on our subsidiary business, despite COVID-19, all our overseas subsidiaries are operating relentlessly to support their respective communities. In UK, our team continued operation throughout its 3 branches till general lockdown initiated by UK government. After initiation of lockdown, they are now continuing their service by working from home and helping to route significant remittance flow in UK-Bangladesh corridor. Both our subsidiaries in Singapore and UK and Hong Kong remained open throughout this period, strictly maintaining social distancing and adhering to local regulations related to COVID-19. On the structure finance side, we have not seen much notable deals in the market. Our major focus at this point of time is to close the deals that we have in hand. On the FI side, throughout our FI vertical, we have ensured sufficient liquidity at a competitive pricing. We have continued broad-basing our confirmation and borrowing sources from different multilaterals, global and regional banks. Thanks to our external partners for their continuous commitment and confidence on us. During this period, we have taken initiative in partnering with one of the multilateral for joint financing of projects with pre-agreed credit underwriting standard. We have also taken initiative for non-recourse basis financing of export receivables, largely for our RMG segment. We have also taken initiative for working with Factor Chain International for factoring of export receivables. Very recently, we have been nominated as participant of GSM 102 and Facility Guarantee Program of US Department of Agriculture. The program will assist us in serving our clients importing US agricultural commodities. This is to be noted that we are one of the 2 recipients of this support program by USDA in Bangladesh. Through this, I conclude my presentation. Over to you, Najmul.
Thank you, Shams. Thank you both, Shams and Faisal, for giving us an overview of how we have been managing our wholesale banking. Just to summarize that and my 2 cents on that, I mean, wholesale banking, as I say, the strategy remains to remain vigilant on the asset quality, and we will continue to do that. We are one of the largest wholesale bank solution provider in the country amongst the local private banks. And in many cases, we have taken many deals where we have taken many of the MNC global banks operating in Bangladesh head on. And that's a matter of pride for us in many of the deals. And thanks to all our FI partners, I will just echo with Shams on that for supporting us through in terms of managing our trade volume and supporting in our trade business. That has been exemplary. We are again one of the very few with whom we have seen the FI partners remaining very comfortable throughout, and every other day the relationship has only gotten stronger. On the de-risking side, as Faisal said, the strategy remains that we will continue to churn our portfolio, and we will be exiting a part of the portfolio, but we shall remain very close and very strong in terms of relationship and solution providing for the tested clients that we have with us. And going forward, as we foresee the credit climate may be very vulnerable given the pandemic scenario as we see. I mean, we don't know how long it's going to prevail. The duration is going to make it possibly going to make it more vulnerable. So our strategy on wholesale banking side will remain very simple, managing the asset quality, increasing the transactional services through automation, and bring more transactional deposits, bring more CASA. On the trade side, we will continue to play on our strength, and we'll keep increasing the export wallet as well as the remittance wallet. And Shams touched on the solution again, the digital solution that we are bringing in, and that definitely will be another supporting factor for us to increase more or leverage further strongly on the remittance piece. At this point of time, just before we move on to MSME business, since we are just concluding on the wholesale bank side, I would request our head of treasury, Mr. Mutiur Rahman, just to share his view, if he has any, overall on the market and from his point of view with regards to the treasury business. You have to unmute. We can't hear you. You have to unmute, Mutiur Bhai. Mutiur Bhai, you have to unmute. Thank you.
Hello. Okay. Hello. Let me share some views on Bangladesh FX market, money market scenario, and future outlook. There was a liquidity stress in the interbank money market during the first quarter of 2020. Interbank rate hovering around 4 to 5% during that period. Total interbank transaction volume was around 3 to 4,000. We all know that to increase money circulations as well as to increase liquidity in the market, Bangladesh Bank has already reduced CRR 1.5% to 4% now from 5.5%. From treasury side, we assume that there will be moderate liquidity pressure in the liquidity interbank money market if government borrowing continues in the coming days. Positive thing is that Bangladesh Bank as a regulator has already been has always been supporting in providing liquidity for to the commercial banks and believe it will continue as long as needed, deemed necessary. Regarding FX market, if we analyze the market in the interbank FX market during Q1 2020, we'll see there was a market volatility due to payment pressure. On the other hand, there was a declining trend in export and wage remittance due to COVID-19 outbreak globally. However, at present, FX market is almost stable. It is true that there is a declining trend in export earnings and wage remittance, but import payment has also been reduced significantly. There are many reasons behind. Number one, now import mostly commodity items, no capital machinery is imported at this stage. Due to ongoing COVID-19 pandemic, oil prices has fallen significantly in the international market. Import volume of industrial raw materials has also been reduced drastically. What is the future forecast? FX market may be little bit stressful if wage remittance and export earnings keep up its declining trend, even though FX outflow, especially import payment, remain in the same level. However, I believe that Bangladesh Bank will continue their support for improvement of FX market liquidity for trade settlement, considering the ongoing COVID-19 pandemic scenario. That's all from my side in brief.
Thank you, Moti Bhai, for covering the treasury point of view as well. So that till now, that's what has been happening on the wholesale bank front. Now we'll just move our focus a little bit to another business. Let's hear from our MSME business update from Omar Tayyab, head of MSME. Omar.
Thank you, Rahel Bhai. A very good afternoon to all our viewers. In Q1, we have witnessed a bit slow momentum if you compare it to Q1 2019. Slide. The private sector credit growth was also very gloomy across the country, and it marked a very historic low level at only 8.2% in March. There are a couple of factors which actually contributed to this. Firstly, most of the borrowers were anticipating and they were waiting to get loans at 9%, which were declared earlier from April 1st. And they deferred their loan drawdown. And also what they have done, they injected their own cash from their accounts held with the bank, and which also put some liquidity pressure in the bank side. Secondly, the COVID-19 already affected China and major European countries back in January and February, and it started to spread in Bangladesh from mid-March. So due to the fear factor, the economic activity also came down to a bit slower than if you compare the similar period of first quarter 2019. Due to these challenges in quarter one, our loan portfolio dipped by 6% YTD from December 2019. However, we still managed to disburse 396 crore taka loan during the first quarter. Also, we have comparatively grew in few priority areas like women entrepreneur. If you compare with quarter one 2019 versus quarter one 2020, women entrepreneur loan disbursement grew by 55%, cottage and micro segment by 75%, and to rural areas by 4%. Next slide, please. So now sitting in June 2020, our main aim is to help facilitate the MSME, our existing MSME borrowers to get back to their businesses through various support given by the bank. We know that the path to recovery will be very stressful and long, and there is no silver bullet or no shortcut. But Prime Bank SME and Prime Bank as a whole is poised to gradually overcome the impact that we have on our SME portfolio through series of strategic effort and through our extensive credit supervisory framework that we have put in place over the last few years. We have already taken several support measures to help facilitate our MSMEs. From the very beginning of the lockdown, our relationship team rigorously and very consistently communicated with the clients and analyzed their situation. Based on the situation, our bank has offered 3 months EMI deferment option, and already thousands of borrowers has availed that. Also, we have extended the credit limit validity so that the customers can access their continuous loan accounts without going for the formal renewal process. This has helped continue their business during the last two months. We are very actively working on the government-sponsored, government-declared stimulus package. And so far, we have almost selected around 2,000 customers, which we can give loans under this program. And we're hopeful that we'll be one of the few banks who will come up with the big numbers in this front. We're also offering enhanced facilities and targeting our borrowers for BB refinance scheme so that they can help absorb the loss. They can absorb the loss that they have incurred over the last few months. As a strategic point of view, as our MD has already said, MNCO, we are not going that much bigger into the new loan front. That's why in Q1, we have been a bit cautious in growing our loan book. Next slide, please. This COVID-19 actually challenges in a way that we have never faced before. And due to this pressure, we have reoriented ourselves to a new work model. And we have resorted to electronic workflow. These has helped over the last few months to our relationship channel, our credit people and the operations team to support our clients. All the things that we have mentioned earlier in the slide, all the activities were carried out through the electronic channels and to facilitate the customers. We are also further developing our bank's infrastructure to serve CMSMEs digitally. Finally, we envision a different future for MSME banking in Bangladesh, and we want to lead that change as a bank. Currently, we are working on a few game-changing strategies that we believe will remodel our business and will help us acquire new business acquisition verticals. We'll not elaborate more on this because of trade secrets. Just to give a short introduction of what we're doing, we're focusing on industry, trade body, and cluster alliance, which we think will help us drive the financial inclusion agenda in a very structured manner. Also, we are going to introduce platform banking very soon. So we are aiming to digitally onboard clients and give them loans based on the score models. Also enable payments for the partner outlet of those platforms. We will definitely boost up our supply, distribution chain, and retail chain finance. As we are a very large corporate bank having many big names in our portfolio, we will leverage on those strengths. We are also planning to launch very soon a new deposit account that will enable digital onboarding of mass level MSME accounts. Finally, before I conclude, I would like to reiterate that we will continue our journey to become a financial supermarket for all SMEs through our product innovation and solutions. And we want to be the preferred MSME bank for millions of SMEs in the country. That's all from my side. Thank you.
Ajmul, if you could just put this slide for a few more seconds, I would just thank you, Tayyab, for your overview on our MSME business. Ajmul, the last slide, yeah, thank you. Just want to take a cue from what Tayyab said and want to make a few comments on how we look at our MSME business. I mean, we are definitely not the market leader, And we aspire to be the market leader, but not just by imitating the larger players. I mean, we don't want to follow their business model, not necessarily. What we believe that over the last few years, we have been able to create the infrastructure that we aspire to, both in terms of people, processes, as well as in terms of the infrastructure, internal and external both. So we spent a considerable time in creating that infra for the MSME business to do in the right way that we think, and not necessarily, I repeat, the way maybe some other larger players do it. So what we are going to do going forward, where Tayyab has already touched on, as a pan bank strategy, MSME is definitely going to remain a very big source of our CASA deposits. And they are going to put in all their energy in terms of gathering more and more CASA out of their space or out of their business vertical. On the other side of the balance sheet, on the asset side, as we know that this interest rate capping has already loomed over us with effect from 1st of April. So the conventional way of doing MSME business is definitely not going to make sense as a business case. So for that matter, what we have done, that we have not invested, thankfully, since we were not imitating others, we have not invested significantly in that model. Rather, we spent our time and energy in creating a different model, which will be in play very soon, and which is going to be more on digital-based solution. So through that, we will create more of operational efficiency as lower our operational cost in onboarding SME business. So going forward, you'll see more of these coming from Prime Bank. And thank you, Tayyab, for your presentation. Now we shall move to our next presentation coming from our Head of Consumer, A&M Mahfouz. Before he begins, let me tell you that consumer banking is just alongside the SME business, is going to be, or has been for last 2 years, one of the major focus area for the bank. And this will continue to be a major focus area for the bank. And again, let's hear from Mahfouz, and then we will summarize on that. Mahfouz, over to you.
Thank you, Rahel bhai. Najmul, first slide, please. Okay, it's all right. Keep it here. Good afternoon and assalamu alaikum to all the viewers. In first quarter, Consumer Bank registered positive growth in most of the areas. Major indicators showed positive traction, though the overall external environment was extremely challenging. If you look at the overall consumer banking numbers of Q1, year on year, that is from March 2019 to March 2020, consumer banking deposit grew by 767 crore, which is a 6% growth year on year. Consumer banking deposit now comprises of 61% of bank's total deposit, and total consumer banking deposit stood at Taka 13,033 crore as at the close of business 31st March 2020. Though in Q1 2020, we saw a slight decrease in overall consumer banking deposit portfolio, mainly due to large volume of legacy scheme maturity. However, through our all-out effort, we have managed to address the declining trend, and from then onwards, and have registered a positive growth of Taka 166 crore as of 31st May 2020. During Q1, 16,000 new CASA accounts were onboarded. Payroll deposit portfolio grew by 31 crore Taka. 2,500 plus payroll customers were added to the portfolio. Payroll banking average salary disbursement per month grew from 100 crore Taka in Q4 2019 to 118 crore Taka in Q1 2020, which is a net 18 crore per month salary disbursement growth in Q1. We have added 10,000 plus new debit cards in Q1. Najmul, next slide, please. Now, if you look at the business performance of Monarch, our priority banking segment, in Q1, Monarch deposit grew by 45 crore Taka, and total deposit portfolio of Monarch reached Taka 1,343 crore in Q1. On the product side, we have introduced insurance protection scheme for all consumer loans, that is for personal loan, mortgage loan, and auto loan. We have introduced insurance protection schemes in Q1. Introduced 13 types of non-frill accounts, no frill accounts to comply with the financial inclusion initiatives of Bangladesh Bank. Najmul, am I audible?
Yes, it's perfect. Please carry on.
On the product development and reengineering side, as I have mentioned earlier in our previous presentation, process reengineering is a continuous initiative in Consumer Bank. Under such initiatives, during Q1 2020, we have introduced express loan for our payroll customers. Now, customers who are maintaining their salary accounts with us can avail personal loan within 24 hours. We have also introduced new process flow for home loan and student file processing to provide faster service to our customers. We have automated our consumer loan file routing process, that is introduced e-workflow. We have also automated charge documentation fill-up module, which has generated customer convenience and reduced turnaround time significantly. Next slide, please. Okay. Considering the current COVID situation and also to adopt post-COVID new normal work environment, we have introduced credit card bill payment facility through BEFTN and bKash for our credit card customers. We have also changed and digitized the process flow of card check processing and easy payment plan processing to accommodate post-COVID new normal limited scale branch operation model. On the partnership and alliance front, till end of Q1 2020, we have continued our effort to expand our alliance network and have tied up with 300 plus renowned merchants for 0% EMI program, and also tied up with more than 300 lifestyle partners with special discount offer for our customers. We have also launched special discount and cashback offer with 4 leading online medicine stores and 5 leading online grocery stores. On the alternate delivery channel, 742,000 withdrawal transactions were done through our ATM network, amounting to 651 crore during Q1 2020. 10,000 plus e-commerce transactions amounting 2.5 crore were done through our Altitude network, which is our internet banking platform. Our call center handled 87,000 plus calls in Q1 2020. We have launched Altitude internet banking web and mobile app version under unified platform. More friendly and convenient for our customers, keeping in mind current COVID situation and post-COVID new normal situation, we have introduced free self-registration process for Altitude, which will allow customers to register for Altitude app from their handheld devices sitting at home and without visiting the branches. Apart from these initiatives, our relationship managers and the entire relationship team remain in constant touch with all our customers and provided best possible support under extremely challenging time. These initiatives from the bank was appreciated by our customers. We have now entered into an extremely challenging quarter, and to keep our business momentum going, we need to continuously explore new business verticals as well as new way of doing things. Years ahead will be tough, and recovery from this will be long and painful. Let us all put our best effort to overcome. Inshallah, with our collective effort, we are confident that we will be able to overcome. That's all from my side. Rahul Bhai, back to you.
Thank you, Mahfuz. Najmul, just stay on this slide for a second, for a few seconds. While Najmul brings us back to that slide, I mean, just want to summarize on consumer banking front. I mean, this is definitely in a banking business, consumer banking being the branches within that is always the front end to the customer interaction area. So what we have been doing, I mean, as I keep repeating this in many of the occasions, that historically Prime Bank had been a wholesale bank driven business, wholesale bank driven bank. For last couple of years, we have been trying to shift that focus and kind of energize our consumer banking front more by creating more of the ecosystem as much as possible, because we have learned one thing with the change of the demography that we have currently in our country with the new millennial generation. They don't want to go to the brick and mortar branches anymore. So we realized that, and we had been playing smart. We have been creating alternative delivery channels. And in this pandemic period, we have experienced it so significantly that our internet banking usage or penetration has been way more than it was ever before. And what we have done, we are currently working on changing or upgrading the look and feel of our Altitude, the internet banking platform, as well as creating more and more functionalities within that, which will be coming into play over the next 6 months period in phases. And we are, as a team, we are working on enriching the functionalities of our internet banking and other delivery channels. In terms of branches, we are going to see some of the changes in terms of the sizes of the branches. We are going to resize our branches, and that is going to be in line with the overall strategy of the bank. And we are going to very soon launch, I mean, we mentioned it in our last presentation, the central bank approval is currently being awaited to launch our agent banking business. And that definitely is going to be a non-conventional model that we wish to adopt. Again, not remain a follower, rather lead the business in our own unique way. On the alliance side or partnership side, as I mentioned, that we want to create or we want to be the vision that we have on the consumer banking side is to be the lifestyle partner of our consumers. So for that, whatever partnership alliances in terms of business, merchants, as well as fintechs and other telcos or whoever that may be, we would be doing that over the next period of time. Thank you, Mahfouz, for giving us an overview on the consumer side. At this point of time, I think it's time for us to kind of close down on the presentations from our side and take the question and answers. We've spent almost an hour. So Najmul, over to you. If we already have some questions, we're pleased to answer them.
Thank you, Ralbhai. We have received questions from many quarters. Here we have, first of all, I'll read out some of the questions that I have received from the FI. And then we are also receiving some of the questions from the Facebook and YouTube where we are running it live. So the first one that I'll be reading out, that is, what were the import, export, and remittance volumes till date since the outbreak of COVID-19?
What were the remittance and what is the other one?
What were the import, export, and remittance volumes till date?
Import, export, and the remittance volume.
Yeah.
Okay. Shams or Faisal, would you like to take that? Shams? Faisal?
Sure, I'll be taking this question.
Sure.
So our import for Q1 2020 is $496 million US, and export is $446 million US. And on the remittance side, for quarter 1 2020, we made $333 million US.
But do we have the question was more specific towards YTD numbers? Do you have the YTD trade volume and the remittance volume right now? If you don't, we can always answer him back with the update.
Yes, we do have.
Thank you. If you could just tell that.
Sure. I'm just going to tell you on the YTD numbers. If we talk about import, it's $615 million US, export 560 million, and on the remittance side, it is 376 million up to April. Thank you.
Thank you, Shams. I mean, it is obvious, and as we all know, that due to this global pandemic, the whole business condition all around the world kind of came to a standstill, and Bangladesh was no exception. So on the import and export side, obviously, we were one of the worst affected ones. And the import side, as a matter of fact, in the presentation, Shams also mentioned that since Feb, when China got affected, since January, February, our import business kind of slowed down due to the pandemic impact. And in April and May, both the months, we registered a very low volume on the trade side. Reason was very simple. All the businesses were kind of on a standstill, both as home as well as in abroad. But despite that, we have seen a very decent growth, and we reassured that we are going to continue having the market share that we already have, or we have been having, and the mind share as well of all our customers. Because the moment they reopened their businesses, they started calling us, and we have been doing business with them since right away. The next question, Najmul.
The next question is, what is the bank's plan going forward in terms of loans and advances and investments? Are you planning to increase the portfolio? If yes, then which sector you will be focusing and the targeted amount?
I think in our presentations already we have covered that response. Yeah. And what is going to be our asset underwriting strategy. So I will not repeat that, but I only can reassure that we are going to be selective, and we are going to be very cautious and vigilant in terms of the asset quality, whichever business vertical that we may be booking in. So it will be a very decent growth that we are looking at, a very cautious growth that we will be looking at.
Thank you. What is bank's projections of NPL at the end of the year? And what will be your action plans to improve the NPL? Do you have any plan to write off loan during the current year? So that's the three questions been bundled.
I think it's a billion-dollar question, that what would be the NPL figure at the end of the year? Because we all have to bear in mind that this is something that we are facing today, which the humankind hasn't faced in the almost in the last century. So Bangladesh not being an exception, and as we know, and we have already mentioned, the central bank has already initiated a policy measure through which till June we cannot change the classification status of a relationship that has been since December 31st, 19. So having that in mind and having the business impact, and it all is going to be decided, or to be honest, we can have a firmer view, more kind of a concrete view on this when we approach into Q3. Reason being that how long this pandemic is going to prolong, both at home as well as in the relevant other geographies, is going to determine the severity of the impact. And only then we will come to know that how severely or to what extent the businesses have been impacted of our customers, and how they are going to come back, and how they are going to kind of roll back into the normal or the new normal. So it's a little too early, but we can assure you that we are trying to nurture our relationships. We are going to continue restructuring facilities as and where we feel deemed appropriate, and extend our full support to our tested clientele base, both through our balance sheet as well as from the government extended stimulus package. And let's see how it goes. And maybe during the next quarter presentation, we'll have a better view on that.
Thank you. It brings me back to my second question. What is the current capital adequacy ratio of the bank? Is there any new guidelines from central bank to carry out stress testing? And what is your plan to raise, if required, the capital adequacy ratio?
Habib, would you like to take that?
Yes. Our current capital adequacy ratio is 17.6% plus. Out of that, Tier 1 capital is almost 11%. As of today, there is no new guidelines on this capital adequacy or sensitivity analysis from central banks. Yeah.
But just to add to that, I mean, internally, we continue doing the stress testing at our end for internal consumption and just to see how we are placed. So be rest assured that Prime Bank is, Alhamdulillah, touchwood, in a very strong position with the capital adequacy that we have been maintaining over the years.
Thank you. I'm also mixing the questions that I'm receiving from other panels. The one that just appeared in my screen is, how have term deposit rates been repriced post-COVID? Where do you stand compared to top competitions?
In terms of the deposit rates, let me reiterate on this. I mean, you may have heard it from me before as well, but we take pride in saying this time and again. We have always been offering 100 to 150 bips less than our peer groups, other banks, in terms of deposit rates, and we have been continuing that. As we all know that all our peer banks, most of the banks in the industry, most of the major banks in the industry, since February, started revising on deposit rates. And it has come down to around 6% maximum being offered on any of the term deposits. And we are no exception to that. But what we have seen, and one good thing, which is a matter of pride for us, is that in this scenario where since the pandemic hit, or even before the pandemic hit, when the whole financial market in Bangladesh was going through some challenges, we had seen a lot of depositors moving away from others and shifting deposits to us. And the reason is very simple. They find this Prime Bank to be a place of confidence, a place to be trusted, a bank to be trusted. So we are very much synonymous with trust and confidence, which is a matter of pride for us in last 25 years, with the relentless effort from the Honorable Board of Directors and the other members of Prime Bank family, we could create and we could achieve. Even since the pandemic outbreak hit Bangladesh in last 2 months, when everything was standstill, in the limited scale of banking operations that we were running, we have seen quite a significant amount of deposits inflow coming in, and these are all new to bank deposits. Let me reassure you, flowing into Prime Bank. So that is again a testament or a result of all our effort and creating this trust and confidence amongst the customers out there. Thank you.
Thank you. The next question is, how is the country's balance of payment situation? Are you feeling any pressure for repayment of trade loans and contingent LC liability? How are you managing LC extension permission given by Bangladesh Bank?
I'll start from the latter part of the question. I mean, responding from the latter part of the question. And I would request Faisal and Habib both to bail me out in case if I'm saying anything wrong. We have been extending some of the maturities, remaining within the parameters as advised by the central bank. In many of the cases, we have done that. And also we have to bear in mind that there are international regulations, and in trade transactions, it has to be in consultation between the buyer and the seller, and both parties have to agree to certain conditions if needs to be amended. So we have been doing that. And in terms of general response towards how we see the balance of payment, one good thing, as we know that has happened, the oil price has hit ever lowest. So that has been a positive factor in terms of maintaining a very good, relatively, I would say, in relative terms, a very good balance of trade for the country. And we don't see that kind of being jolted in the nearest future. Habib, any comments on that?
Yeah, I think on country side, we don't feel any pressure as of today on balance of payment because of a couple of reasons. The first reason is, though export has come down significantly, but import also has come down significantly. And the volume of import or the size of import is relatively, larger than the export. On the other hand, This is the first time in Bangladesh history we registered more than 34 billion US dollar as FX reserve. So we crossed this mark in this month itself. So combining all these things with that, as we understand that what we already said, that agri production has been tremendous in Bangladesh, plus the oil price has come down globally. So combining all these things on country's balance of payment, I think is in very good shape, and definitely you are not facing a stress scenario on BOP side. Yep.
Thank you.
Now, the next question is, what is the percentage of RMG exposure of your overall book? How many customers have been canceling the orders? Any stress witnessed in Prime Bank's customer segments or amongst the customers?
Faisal, would you like to take that?
Yeah, let me take that question.
Sure.
In Wholesale Bank, it's approximately about 18%. And if we talk about Pan Bank, it would be around 12.8%. That's the RMG concentration. Well, I missed the second question. What was the second question? Order
How many
cancellation,
customers
right?
have seen canceling the orders? Have you seen?
Okay. That would be less than 10%. And again, having said that, I would say that what is happening now, the large buyers, what they're saying is they're deferring the shipments, right? They're asking not to cut the fabrics and so forth. So that number is gradually also coming down. And what was the third question?
Any stress witnessed in Prime Bank's customer?
With weakness, I would not say. I would say they are requiring some breathing space in terms of the term loans that are falling due, the installments and so forth, and we are supporting our customers. So there were some stress with the the salary payments, which we have already done. We will be doing it in the second phase. We will be also supporting the government customers from the 30,000 FSP program. So I think we have extended our full support, and it should be a joint effort, and we should be okay.
I mean, just to add to Faisal what he said, I mean, thanks to our strategy and thanks to the team for working around the strategy over the last few years, where we have a portfolio where the clientele base that we are dealing with are not the one who are vulnerable to this shock. I mean, not that vulnerable to the shock. Obviously, everybody has been feeling the shock, but we are still having the portfolio which is going to withstand the shock in the longer term. And we shall continue to be there to support them through.
We have just received another questions. We observe Prime Bank has allowed work from home for majority of the staff, running branch with skeleton staff even after COVID lockdown. Will it affect customer service? What are the steps on COVID security?
Thank you for raising that question. I mean, this is another area where we have been extremely kind of vigilant from top to bottom. I mean, with the guidance from the Honorable Board of Directors from the very first day or even before that, prior to that, we have been devising our safety, security, health safety measures for all our Prime Bank family members. And as you all know that from 31st of May, when all the business houses kind of reopened and everything, we have been operating with the limited skeleton size human resources attending the office, but again, to assure you, not compromising on the service standard. And for last 2 months, we had been extending fullest support to all our clients, despite the limited scale of operations that we have had. And thanks to our technology colleagues for devising the mechanism through which most of our colleagues are working day and night from their home through technology support and extending services to all business verticals and support functions and so forth. The health and safety of our Prime Bank family members will always remain to be the first and foremost priority, alongside the same for all our stakeholders. So we shall be maintaining that and without compromising on the service standard for sure.
Thank you. Now, the next question is stimulus package from the government regarding this. We've actually received a couple of questions from a couple of panels. How much quota Prime Bank has received from the regulator segment-wise, such as corporate and SMEs, and what criteria Prime Bank will use for disbursing the loans under stimulus package?
So would you like to tell about the wholesale bank, and then Tayyop can comment on the MSME?
I don't think if we can share the number which has been assigned by the central bank to us. I don't know whether I'm in a position to share that. The distribution has been made based on basically the 31st December balance that we have shared with central bank. Based on that distribution, they have given us various subsectors where we will be disbursing the loans. The distribution is well diversified, and we have already started working, and hopefully from I think by Sunday the applications will be submitted and we should be getting approvals for disbursement under these heads.
From the SME side, the allocation is 10% of December 31st balance sheet as given by the central bank. And as I said in my presentation earlier, we are giving it utmost priority right now. And we have already shortlisted around 2,000 clients across the country into various sectors, since SMEs are well diversified. And in terms of selection, we are following the guideline given in the central bank's circular. The most affected SMEs are given the priority. So we are going in line with the prescribed formula by the central bank.
Just to go back, our percentage is 11% for wholesale bank.
I mean, overall, from Prime Bank side, the modus operandi in terms of distributing or channelizing this stimulus package is based on the client and bank relationship, as mentioned in the guideline by central bank, and we are going to stick to the tested clients of our bank in terms of distributing that. Next question.
Thank you, Rahul. We can observe interest freeze on the payment. We can observe interest freeze on interest payment on loans for April and May. What will be the impact on profitability?
We are no exception to the banking industry, as we all know. I mean, for majority of the banks in the country, especially amongst the local private banks, it's roughly 70 to 80% of the revenue comes from the interest earning. So the April and May, as we all know, the guideline that has come from the central bank to put the interest on hold and transfer it on a blocked account. The good news is that the Honorable Prime Minister herself has announced just a few days back that a part of it will be given by the government through subsidy, and the rest of it may be kind of, which we are still awaiting the final guidelines from the central bank, will be repaid by the clients over a period of time, not exceeding 12 months, as we understand. So we shall wait for the guidelines to come in, and then only after that we'll be in a better position to assess that what would be the impact on this year's balance sheet or our income statement.
Thank you. Another question that I have received: has Prime Bank extended moratorium to its customers? If yes, how it would be availed?
Yes, we have. I mean, if you had gone through the presentations before, where Tayyop and Faisal both mentioned that we have kind of offered tailor-made solutions to many of our clients, and wholesale banking side, we have extended to many of our clients in MSME business, more than 1,000 clients, to be very honest, where we have extended payment holiday, not exceeding 90 days till date.
Thank you. How much were the restructured loans as of March 2020 as percentage of overall advances?
Habib, would you comment on that?
Yeah, if we, it will be 9% if we accumulate all the restructured loan till Q1 2020 from the inceptions. So In terms of percentage of total loan, it will be something around 9%.
Thank you. And how much COVID-19 related provisions have the bank made till date?
Habib, would you like to answer that?
We are making provision on loan loss as per the requirement of the central bank. Specifically on COVID things, we'll have to wait how things goes on, and then we'll take a call accordingly.
Thank you. Now I'll be taking some of the questions from our journalist brothers and sisters. Here, I can see Shamim Zaidi, Mr. Shamim Zaidi has asked, given the fact that Bangladesh Bank is going to allow non-bank firms to operate ATMs, do you find the move wise for banks? Why?
I'm sorry, I didn't understand the question. Would you just repeat the question?
The question is, given the fact that Bangladesh Bank is going to allow non-banking or non-financial firms to operate ATMs, do you find the move wise for banks? What's your point of view?
Mahfouz, would you like to take on that question with regards to the service related? Yeah.
Sure. The question that our journalist brothers have asked is, Bangladesh Bank is going to allow non-bank companies to operate ATM network all over Bangladesh. From bank's point of view, we welcome that approach because to operate ATM network by the banks is a costly affair. If any other institution come up with such an approach that they are going to set up large number of ATMs across the country, and if that network can be used at a lesser price or lesser expense from bank's point of view as well as from customers' point of view, that will always be welcome from our side.
And just to add to what Mahfouz said, I mean, this is again is an evidence where central bank, being the regulator body, is actually welcoming or facilitating the collaboration amongst different bodies to bring in more operational efficiency, both in terms of costs and infrastructure. So definitely we welcome that.
Thank you. I've got another questions now. That is, can this stimulus package create extra burden on the customers as well as on the asset quality in near future?
Could you repeat that question again, please?
Do you think the stimulus package may create extra burden on the customer as well as on the asset quality?
Well, I don't know how it is going to create an extra burden on the customer, but in terms of asset quality from bank's point of view, yes, I wouldn't say it's an extra burden, but the burden remains on the shoulder of the bank because it's the pure credit risk being taken by the banks. Now, the good news is that, especially with regards to the MSME vertical of business, the central bank, up in our persuasion, as a body from banking industry, they have already shared a draft guideline with regards to extending some sort of credit insurance arrangement or credit guarantee arrangement. And Prime Bank, along with just a very few number of other banks, 3-4 other banks, we have reviewed that draft guideline and given our feedback on that. And we expect that all the commercials and other terms would be kind of discussed very soon, very shortly, and we'll come to a position where we'll be able to do that or extend that. And a major part of the credit risk would possibly be covered through that credit guarantee scheme. So we look forward to have that in play very soon, because otherwise, both on wholesale banking business vertical as well as on the MSME business vertical, the credit risk solely lies on the shoulders of the bank, and that is where the customer relationship or the test, the credit history plays a pivotal role.
Thank you. The questions that we have received pretty much we have covered in earlier answers and also in the presentation. So now probably the last two questions we would ask from the journalist. The one that's been asked by Mr. Razaul H. Kaushik from Ittefaq, Bangladesh Banker guideline or nirdeshona mene অন্য সময়ের মতোই ব্যাংকগুলো কাজ করছে, তবে সাম্প্রতিক সময়ে কিছু ক্ষেত্রে বাংলাদেশ ব্যাংকের নির্দেশনাকে গুরুত্ব দিচ্ছে না অনেকগুলো ব্যাংক। বিশেষ করে ক্রেডিট কার্ডের সুদ নেওয়ার বিষয়ে কেন্দ্রীয় ব্যাংকের নির্দেশনা যথাযথভাবে মানা হচ্ছে না। এই বিষয়ে ব্যাংকগুলোর এমন অবস্থানের কি কারণ? প্রাইম ব্যাংক এই বিষয়টি কিভাবে দেখছে?
প্রাইম ব্যাংকের তরফ থেকে আমি আপনাদেরকে একটা ব্যাপারে সন্দেহাতীতভাবে রিএশিওর করতে পারি। সেটা হচ্ছে যে আমরা কেন্দ্রীয় ব্যাংকের সমস্ত নির্দেশনার ভেতরে থেকেই সব ধরনের কাজ পরিপালন করে যাচ্ছি এবং আগামীতেও ইনশাল্লাহ করতে থাকবো।
Thank you. And the second question is from Amadesh Shomoy. Is the pre-pandemic period your deposit and loans decreased? Why? Banks are enjoying some policy support. How long the support will be needed? What will be the main challenges in future banks, in the future banks will face?
To answer the first question in terms of, from our point of view, from Prime Bank point of view, which I have already mentioned before, we haven't seen depletion in deposits. Rather, we have seen enhancement in our deposit base, and which is a good thing. And I will not spend more time on that. The second thing, I think, again, I have already covered, or we have already covered, that how the packages or the stimulus packages are going to be distributed and what's the modus operandi we are adopting. The third and the final thing that you have asked is a very pertinent one, that how the banking industry is seeing the challenges forthcoming. The biggest challenge that we will be seeing is definitely managing the asset quality, and I'm talking about pan banking industry. The asset quality is definitely going to be one of the biggest challenge. The other biggest challenge that we foresee is maintaining the operational efficiency vis-a-vis the operational cost. Because we must have into consideration that for banking industry in Bangladesh, the pandemic COVID-19 outbreak in Bangladesh and the lending interest rate capping all across business verticals, both kind of coincided at the same time. So unfortunately, banks are facing much more significant looming scenario, gloomy scenario than many other businesses, to be very honest. So for us going forward, managing the business asset quality and managing our operational efficiency and managing the cost related to that is going to be the biggest challenge. And from Prime Bank point of view, the way we see it, we also see it as an opportunity to cater to the niche of the clientele base that we want to cater to going forward. We see it as an opportunity where we, as a bank, have been kind of working for last few years in terms of re-engineering our business processes or operating module or operating model. And this pandemic scenario, it has kind of pushed us further, and it has proven that we were foreseeing the future, not in the negative way, but in a positive way, that we need to be ahead of the competition. So more of digitized processes, more of digital solutions in every business verticals and support functions is going to kick in. And that is going to be the name of the game going forward.
Dhanyabad. It takes me back to my last questions from the journalist panel. As I'm repeating it again, that some of the questions are quite similar, so I've summarized it here. So the last one here I'm reading out. ব্যবসা বাণিজ্যের এই খারাপ সময়েও এমন আয়োজনের জন্য প্রাইম ব্যাংককে অনেক ধন্যবাদ। আমরা দেখতে পাচ্ছি ফার্স্ট কোয়ার্টারে প্রাইম ব্যাংক খুবই ভালো করেছে। এই কোয়ার্টারে করোনা ভাইরাসের প্রভাব চোখে পড়েনি। পরবর্তী কোয়ার্টারগুলোতে করোনা ভাইরাসের জন্য ব্যাংক ব্যবসায় কেমন প্রভাব পড়বে, এই বিষয়ে আপনাদের কৌশল কি হবে?
আমার মনে হয়, ধন্যবাদ আপনার প্রশ্নের জন্য প্রথমত, এবং আমার মনে হয় আমরা এর মধ্যেই আপনার প্রশ্নের উত্তরগুলো সবগুলোই দিয়ে ফেলেছি। Definitely, আমি আমার সমাপনী বক্তব্যে, or in my closing remarks, I wanted to mention that yes, till Q1 2020, the bank has been doing excellent. The bank has been registering very outstanding performance with regards to its operational business or operational business performance. But unfortunately, with both pandemic scenario as well as the lending rate capping, we're in a crossroad, and we don't know how Q2 or Q3 is going to pan out to be. We're keeping our fingers crossed. We reassure from Prime Bank's family that we are not leaving any stone unturned in terms of thinking differently, as we have always been an exceptional bank. We think exceptionally, we try to think differently. and we shall be acting differently. And to reassure and reiterate again that over the last 2 months, the whole senior management team, along with all the other members of the family, have only been putting their heads together to think and come out with the strategy, both in terms of operating model and in terms of business model, that how in the post-COVID new normal situation we are going to act on. Bear with us, there could be a little bit of hitches. It will definitely be a roller coaster ride, and we are not going to be an exception out in the market, but we shall definitely come out or walk out as a winner, as ever again. I think I have answered that question, Najmul.
Yeah, sure. That's where we would like to conclude the session. So Alba, if you'd like to conclude, or if there's any remark that you'd like to make addressing the followers.
Thank you very much to all our stakeholders who has been patiently listening to this or watching this earning disclosure Q1 2020 of Prime Bank. I would again, at the very last, want to thank our honorable board of directors, central bank, regulators, FI partners, and nevertheless, last but not the least, most importantly, our clientele base for being with Prime Bank for last 25 years, and especially in last 2.5 months where this unprecedented situation has hit us. And we reassure from Prime Bank family that we are going to remain to be your trusted partner. We are going to be remaining as the trusted place for your deposits to keep with. So please place all your savings, all your deposits with Prime Bank. This is a very trusted place to be. And to all our clientele base and our other stakeholders, thank you from core bottom of our heart for all the support all through. And going forward, we shall need it more, and we will not let you down. It's a roller coaster ride that we all are in together, and we all shall overcome together, inshallah. Thank you.
Thank you.